Hey everybody, Josh Sigurdson, World Alternative Media here, and we are going to go into many of the reasons why a lot of people are concerned, seriously concerned about both the markets and the economy in 2020 and going forward. We are going to get into 12 signs that the economy is seriously slowing down as 2020 begins. But first, I want to get into something that I find very pertinent. We talked about it in 2019 as well, how CFOs are reacting to a potential oncoming recession. I want to go into this article first and foremost, as it says 97% of CFOs believe a recession is coming in 2020 from this Zero Hedge article. And as the article goes into, 97% of CFOs, corporate financial officers, surveyed in a new poll believe that the United States will be in recession by the end of 2020. 88% of CFOs represented in the survey work at companies generating greater than $1 billion in annual revenue. And as it says here, corporate financial officers are forecasting an impending economic downturn according to a new survey of around 150 chief financial officers conducted by the consulting firm Deloitte. In its CFO Signals report covering the last quarter of 2019, Deloitte found that 97% of CFOs queried believe either an economic slowdown or recession will occur but before the end of 2020. This is up from 88% 1 year ago, which we had reported on at the time, and I believe we reported on in 2018 and 2017 as well, and even 2016 for that matter. I want to point out before I continue this article here that we've been in a recession since 2008. It's just been papered over. Debt. It's all fake, as Robert Kiyosaki told us in many of our previous interviews with him here at WHAM. It's all fake hot air. That's what it is. We'll get into that more in a moment, but carrying on with this article here, it says, according to a report by Newsweek, by the end of 2018, many CFOs surveyed began to cite external factors such as trade policy over internal factors as the dominant constraint on their company's performance, the report noted. And increasing concerns about a reversal of the longest economic expansion in U.S. history come amid related anxieties about Trump administration policies that may be hampering growth. As it says here, the external risk most frequently cited by CFOs in the survey was a combination of trade policy and tariffs. The second most cited external risk is political turmoil and general instability. Companies are also growing increasingly worried about upcoming election. While the impact of the 2020 election was only cited by a relative handful of respondents, its placement on the chart has moved substantially upward since the third quarter of 2019, according to Newsweek. As it continues here, it says the CFOs surveyed expect very low interest rates and 10-year bond yields. They again expect a strong U.S. dollar as well in the upcoming year. At the same time, consumer and business spending expectations have fallen. CFOs are less likely to expect higher industry revenue and prices, according to the press release at PR Newswire. Expectations for a U.S. economic downturn have risen since earlier this year, with 97% of CFOs saying that a downturn in the economy, a slowdown, or a recession has already begun or will occur by the end of 2020. That's up quite a bit from the 88% reported in first quarter 2019. Overall, 12% of CFOs say they believe a downturn has already commenced, and 14% say they already see signs of a downturn in their company's operations. As it continues here, it says, compared to early 2019, companies appear to be taking more defensive actions related to downturn expectations, particularly around reducing spending and limiting or reducing headcount. While CFOs expect some form of U.S. downturn by the end of 2020, the good news is that expectations of a full-blown recession have fallen sharply since the first quarter 2019. Sanford Cockrell III, National Managing Partner of the U.S. Chief Financial Officers Program, Deloitte LLP. And then it says, perhaps this explains why one of the market's most important pillars of support, buybacks, have suddenly collapsed. And it shows this interesting chart here. Now, we're going to continue to get into much more of this, including the 12 signs that I was mentioning earlier. But I want to first note that, yeah, there were more expectations of a recession in the first quarter of 2019 because the stock market was doing terribly. And now we're just seeing it pump to the stars. I mean, the plunge protection team came in there, saved the economy, but printed a bunch of currency, ends up extorting taxpayers. Price of living goes up. People on the streets are doing worse than they were before. And as much as they say, oh, the job numbers, look at the job numbers. The job numbers are fake, guys. Just like the currency, it's fake. Just like the stock market, it's fake. It's all hidden in the labor force participation rate. Look into the labor force participation rate and then look at shadow stats by John Williams. This is all completely just fogged over with nonsense. And I have to note that, I mean, what they're talking about here is a symptom of a really played out, really propped up, really manipulated, really centrally planned system. I mean, there's been concerns for a while. I don't blame Trump. I don't blame Obama either. I mean, if you look at the charts, you see the downturn in 2007, 2008, and it's been going up from there. So anyone could say, Obama saved the economy. Anyone could say Trump saved the economy. The fact is, neither of them saved or hurt the economy necessarily outside of minor factors. It actually comes down to a much more complicated issue of central banks, of Bernanke, of Yellen, of Powell, and whoever pulls their strings. I mean, the fact of the matter is, when you print currency out of thin air using usury under the social contract, aka legal tender laws, aka fiat by law by force, then you're charging the interest to the taxpayer. They're not even paying off the debt, but it's just the interest on the debt. And they're causing the price not to go up on goods, but the value of your currency to go down. So it looks like everything's going up in value, but it's not. It's a currency that's going down, and wages stay stagnant, and no amount of raising wages is going to change that. It's going to stay the level no matter what. They can raise it $20 more an hour, but what that would actually do is just drive businesses out of the country entirely, over to China, to other places that are cheaper to produce because they can't survive otherwise. It's not the wages, and by the way, that would just level out the value anyway. It's not the wages, it's the inflation. The inflation is the biggest sin, the biggest fraud, the biggest scam unto humanity today that we see. It's why we see so much homelessness. It's why we see so much poverty. It's why we see two parents going out working two jobs in many states and still not being able to afford a place as the housing bubble props up in places like California and New York while taxes go crazy. It's insane. We're basically working more than 50% of the year for the government. We are slaves. Or are you? Anyway, with the interest rates going down all over the world, and we see the very real potential of negative interest rates very soon in the US, in Canada, in Britain, in Europe in general, in Australia, and many other places, and even China, this is something that a lot of people are concerned about. It's about time they have a war or something to prop up the dollar that's losing faith, isn't it? Carrying on here into the 12 signs that the economy is seriously slowing down as 2020 begins by Zero Hedge, we're going to go into this article originally authored by Michael Snyder at themostimportantnews.com. And as it says, lost in all of the headlines about Iran and impeachment is the fact that the U.S. economic slowdown, which began during the latter stages of last year, appears to be accelerating. The final numbers, which will tell us if we are officially in a recession at this moment, won't be released until months from now. But for millions upon millions of Americans, it definitely feels like one has already started. Yes, the stock market has been soaring, but at this point, the stock market has become completely divorced from economic reality. And as you will see later in this article, stock prices are now the most overvalued that they have ever been in all of American history. And as it says here, but before we go to that, let's talk about what is happening in the real economy. The following are 12 signs that the economy is seriously slowing down as 2020 begins. Number one, the U.S. Manufacturing Purchasing Managers Index has been in contraction for 5 months in a row, and it is now at the lowest level we have seen since June 2009. Number two, last month, manufacturing employment fell at the fastest pace we have seen since August 2009. Number three, last month, new manufacturing orders fell at the fastest pace we have seen since April 2009. Number 4, Chicago PMI has been contracting for 4 months in a row. Number 5, European manufacturing PMI declined again in December. Number 6, Borden Dairy, one of the largest dairy companies in the entire world, declared bankruptcy just a few days ago. Number 7, earlier this month, the Baltic Dry Index had its worst day in 6 years. Number 8, overall, the decline in the Baltic Dry Index this month is the largest that we have seen since 2008. Number 9, the auto recession just continues to get even worse. Thanks to the substantial slowdown we witnessed during the second half of 2019, the total number of cars and trucks sold in the United States during all of 2019 was actually below the level that we witnessed back in 2000 when our population was significantly smaller. Number 10, used heavy-duty truck prices have fallen as much as 50%. Number 11, Macy's just announced that they will be closing 28 stores. That sounds familiar. And number 12, to start the year, AT&T is laying off thousands of workers. And according to Robert Reich, those being laid off will have to train their foreign replacements. Oh man, that's just... It's sad to see that happen, and we've been seeing that happen a lot in the retail world recently. Amazon is getting propped up a lot, but they can only get so big, and they have to keep creating or else they go under. So we see a lot of the retail world go under, Macy's, a lot of stores, a lot of malls, the mall apocalypse, as many have called it. And also this notion that like AT&T is like basically monopolizing 5G, which is being forced and rolled out all over the world right now. And when you see them losing so much employment, having to lay people off and go to cheaper labor, well, they're forced to, and U.S. laws and regulations and taxes put these companies in a position where they're better off to do that if they want to be able to continue to be a company. Then you see this kind of stuff happening. I mean, it says a lot about the state of the current economy, regardless of the veneer that people are delivering and have been delivering under every presidency. But anyway, as it continues here, of course, many of the experts continue to assure us that everything will be just fine. In fact, one panel of experts recently came to the conclusion that there's almost no chance of a recession this year. That would be absolutely wonderful news if it was true. Sadly, the number that I just shared with you tell a completely different story. They tell the story of an economy that is most definitely heading for a recession. And according to John Williams of shadowstats.com, if the government was using honest numbers, they would show that we are actually in a recession right now. Like I mentioned earlier in the video, we are already in one. It never ended. It's just been propped up, pushed off, etc. The banks are bankrupt still. I should note that. They're still bankrupt. Their own cash to deposit ratio shows that. The cash to deposit ratio shows that many of the major banks in the world, most of them, are between 5 to 1 to even under 1% of deposits covered with cash. That's not very good. What happens when there's a bank run, guys? Well, that's why they want to unroll centrally planned cashless. But anyway, carrying on, it says, but what about the stock market? Shouldn't the fact that stock prices have been soaring be seen as an optimistic sign? Well, there have been a few other stock bubbles of this nature throughout our history, and all of them have ended very badly. In 1929, stock prices were at an all-time record high, and it seemed like the economic good times would never end. But then the stock market crashed and we plummeted into the Great Depression of the 1930s. In 2000, the dot-com bubble pushed stock prices to absolutely absurd heights. But then stock prices quickly collapsed when the bubble burst and the US economy fell into a very painful recession. During the years leading up to 2008, stock prices once again rose to dizzying levels, and it seemed like the party would last indefinitely. But then the financial crisis struck, and the Great Recession of 2008 and 2009 was the most excruciating economic downturn our nation has experienced since the 1930s. Unfortunately, we are even more primed for stock market crash now than we were in any of the previous examples that I just shared. So how do I know this? Well, for one thing, the PE ratios have become ridiculously inflated. The following comes from MarketWatch, and it shows here, Indeed, stocks are overvalued according to the popular measure of price to earnings, which compares the price of one share of stock to 1 year of per share earnings relative to recent history. The S&P 500 index, SPX, negative 0.29%, is trading at 18.6 times forward earnings, according to the FactSet data, above the average ratio of 16.7 during the past 5 years and 14.9 over the past 10. In addition, price to sales ratios for the S&P 500 are now at the highest level in all of U.S. history. The above chart from Ned Davis Research shows that the price relative to sales for the S&P 500 is at a record high, as it says in quotes, well in excess of what they were in 2000 or 2007 at those peaks, wrote Ned Davis in a Wednesday note to clients. Other measures like the median price to earnings ratio, which exclude the skewed effects of very profitable and very unprofitable companies, shows the S&P 500 overvalued by nearly 30% versus the typical valuation level seen since 1964. In other words, in the entire history of the United States, stock prices have never been more overvalued than they are at this moment. And every other time we have seen stock price ratios get this high, an absolutely horrifying stock market crash has followed. The optimists are insisting that things will somehow turn out differently this time. They assure us that everything is under control and that very bright days are ahead. You can believe them if you want, but every indicator is pointing in the opposite direction. So let's quickly talk a little bit more about this. I mean, Morgan Stanley has released a lot of memos recently warning about the collision course that they're on. There's the everything bubble worldwide that's absolutely astonishing. And I mean, the impact that this will have on the overall economy is absolutely devastating. I mean, the optimism, great. There's a lot of people that made a lot of money in the last couple of years and blah, blah, blah. But with that said, that speculation is always there at the top of a bubble. We saw that in even cryptocurrency, which by the way is doing really well versus a talk of potential war, and I'll get into that again in a moment. But the fact of the matter is that with all of this speculation, people get glassy-eyed and they think nothing can ever end. And we saw that in cryptocurrency years ago. We saw that in the dot-com bubble. We saw it in so many bubbles because the problem is if 95% of the market is terrible, fundamentally not good, and 5% is great, it doesn't matter for that 5% that's great. It's the 95% that's bad that heats up the market, props it up, creates a massive bubble, then it bursts, and it comes down on everyone's heads. And that's the major issue that we're facing right now is just massive speculation over a lot of crap. Like the FANG stocks, why would Twitter be going up? Why would Facebook or any of these things be going up? They're killing off their own creators, their own talent. Same with YouTube, Google, pushing everyone out. All the people that made their platforms big in the first place, all the reasons why people decentralize, quote unquote, from mainstream media, et cetera, to like Google and stuff like that, they're kicking those people off and they're not creating anything of value that's really good. I mean, Libra came out of Facebook and it was terrible. It was terrible. Everyone rejected it. They just stepped away and it just was terrible. They were trying to mimic what the free market had done so well before. In the cryptocurrency space, they're trying to mimic it and they did a terrible, terrible job trying to create a Chinese-style social credit type system. Utilizing Facebook and creating this stable coin with Libra. It wasn't so stable, it didn't work out. They're just trying to prop up their stock because they know the FANG stocks, they're propped up for no reason at this point. There's no reason why they could keep going up. They're bad. All of these companies are just doing worse and worse. They're getting more and more terrible. And yet their stocks keep going up, which tells you a lot about just people betting on things and propping it up with their speculation, that faith. But that faith will one day go away, just like it will with the US dollar as well. This is both about the markets and the economy. And it's not going to end well for any side there, except for those that prepare. With that said, interestingly, and something that I'm actually quite excited about is how people have reacted to fear of potential war, World War III or World War IV, whatever you'd call it at this point. All a war of millions of dead in the last 20 years. I don't know what you call that. But anyway, with the fears of Iran and all that kind of stuff, when you have so many people flooding into cryptocurrency, propping it up to such a dramatic extent, almost every news story is propping it up. And then you see the same thing with gold to a great extent as well. You see that people are looking at these things as safe havens, and that tells you kind of what you can expect to a certain degree, not justifying it entirely here, but to a certain degree when the stock market crashes, when the US economy plummets, and that everything bubble goes boom. and the banks fall with it. I mean, the banks have been holding down gold and silver for a long time, manipulating the price, and it's like a beach ball underwater, and eventually you let go of it, it bounces up with the pressure that is gained. I mean, I believe that we're probably going to see that, in my opinion. Nonetheless, it gives me, some optimism when I see that we are seeing gold and silver and crypto reacting in the way they have to the fear in the news. It tells you that people are looking faithfully at these entities as safe havens. Anyway, so that's my bottom line on that. I appreciate everyone joining us today. As I mentioned with earlier with the Google issue, we are getting demonetized, we're getting censored, we're getting shadow banned to death right now. And we need your help. So make sure to check those links below. We have Teespring, a Teespring store with a whole bunch of options to buy clothing, merchandise, etc. from Wham. It helps keep our media alive and gives you something out of it as well. And on top of that, we are GoFundMe, Patreon, Subscribestar, Float.app, that's flote.app, where I do subscriber-only content. Same with BitChute as well. Go on there and subscribe to us. We're trying to get everything up and running and all the alternatives, Steemit, all of those. Go find us on these platforms. Float.app, at Josh Sigurdson, as well as at Wham, W-A-M. And Float.app is replacing Facebook, YouTube, Twitter, Twitch, Tumblr, Reddit, and Patreon all in one, with encrypted messaging, with monetization on the videos that we post there, and super chats. So you could use crypto in order to do super chats. There's no algorithm. You're able to post what you want, and people can see what they want when they want, without some algorithm getting in the way. They're not collecting your data, sending it to China, etc. So make sure to find us on Float.app. I'm very excited about it. I'm putting my career on the line to put all of my faith behind this app, because I believe it will change everything. But we're also on Minds, and we're also on PocketNet, we're also on Steemit, we're also on BitChute, we're also on all these other platforms, Instagram, Twitter, whatever. So go find us on all these different platforms. I really appreciate you joining us, and anything you could do to help us makes a great deal of difference. It's what keeps free information alive online, as it's being attacked faster and harder than we've ever seen in recent history. So I hope everyone joins in and helps keep this information alive, or very soon all you'll be seeing is Fox News, CNN, MSNBC, BBC, all these guys that cover up for pedophilia, Epstein, all that kind of stuff. So anyway, appreciate everyone joining us, and as always, it's all about individual responsibility. That's what solves these problems. Food, water, shelter, self-defense. They're not gathering things for the toughest guy on the block. Gold, silver, in my opinion, not investment advice, but wealth insurance. And of course, cryptocurrency that are decentralized, fundamentally useful, and the privacy ones that are really looking in a good direction in the near future. If you watch this video all the way through, comment below "End the Fed." Comment below "End the Fed" in the comments. It helps us with the algorithm. Make sure to press like on this video, and the comments also allow us to see that you've watched this video to the end, and I really appreciate it. Anyway, until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change. Like what you see here at Wham, don't forget to check the links below. GoFundMe, Patreon. We cannot do it without you guys. Every donation is extremely, extremely appreciated, as we're getting incredibly shadow banned. We've lost 80% of our audience since January of 2019 and counting. They are ripping us apart here on YouTube, and the only thing we could do in the meantime, as we prepare for the next big step, is to ask for help from the viewers that support our free information that we try to post on a daily basis. You can also find us on Subscribestar, where just $1 a month, that's all it takes, $1 a month is all it takes to truly make a huge difference. If everyone gave $1 a month, it would change everything for independent media, and we could win this information war, and we can defeat the mainstream medias eventually. And of course, on Subscribestar, we post subscriber-only content that you'll only see on Subscribestar. So make sure to pledge there, become a patron. That makes a huge difference, guys. And also, don't forget to check out our Bitcoin address below in the comments and description, as well as on the screen for you to scan, if you please. And also, don't forget to subscribe to us on the alternatives. We will likely be deleted by YouTube in the next 2 years. It's already happening on a vast scale, so make sure to find us on float.app, that's flote.app, at Josh Sigurdson, as well as at Wham, W-A-M. Float.app is replacing every social media, and I mean, it's just incredible the opportunities it provides for not just creators, but for the average person who wants to get away from these nannies telling them what they can or cannot see. They plan to replace Facebook, Twitter, YouTube, Twitch, Tumblr, Reddit, and Patreon. You could subscribe to us on Float and pledge with cryptocurrency. It's really innovative. We are also on BitChute at World Alternative Media, as well as so many others, Minds, PocketNet. You can find us at World Alternative Media on Instagram. There's many options. And finally, don't forget to join us at Anarchapulco 2020, the famous event, the best Liberty event known to mankind, other than perhaps Anarcho Vegas 2020. There are two major events coming up that we are extremely excited about, and you can use promo code WHAM, that's W-A-M, and save 10% on your tickets to these legendary conferences. There's so many amazing people speaking there. You won't want to miss it. So make sure to support in any way you can, even if it's just sharing our videos, pressing like, pressing to be notified. Anything helps, folks. You are the change you wish to see. Thanks for watching, everyone. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.